All right, hello everyone. I hope your year is going good. Um, I wanted to just bring this up again. I brought up BOI filing requirement a few months ago to everyone, and just like many other people, this requirement is not brought up as much as it should be, and as much as how important it is. And there are consequences, there are penalties, and there are hard restrictions for you to follow. Um, Turns out there are a lot of exemptions too, so it doesn't qualify for everybody. I'm no attorney, I'm no legal expert here, but I have a very awesome guest here today. His name is Mr. David Shoup from California Business Formations, APC. We work in the same building. He works here in Murrieta, California. And so, yeah, I would just like to invite David over today to discuss a very important factors and some key items here about the BOI reporting, starting from what is BOI to begin with and why you should be doing it and all that good information. So I hope this is a very valuable time for you. David, mic is all yours. Go ahead.
Okay.
Yeah.
Well, thanks, Tate, for inviting me in. And guys, I know I can't see you right now, but I am so glad that I have this time here so I could go through this with you because this is something that's not going away, right? It actually came into effect January 1st of this year. I'm going to go through all the basics for you and what you need to know, and most importantly, what you need to do about it. So thanks, Tate, for inviting me in. Let's go through this. Let's waste no time. I've got a little bit of a PowerPoint here for us. I mean, I'm kind of a visual guy, so I like seeing what I need to see, what I need to know. So let's go ahead and do this. Okay, so guys, let's see here. Well, let's talk about what we're going to learn today. All right, so I'm going to tell you about what this report is, and we're going to start there. Then we're going to talk about who actually has to comply with these things because not everybody does, and there's a lot of exemptions that apply. So we're going to go through that, the penalties, just kind of what the nuts and bolts of what you need to know about this report because there's some really soon deadlines that are coming up that you need to know about so that you don't get hit with a bunch of penalties because nobody wants that. So first and foremost, the beneficial owner report was enacted January 1st of this year. It's enforced by FinCen. It's actually the Department of Treasury, right? And this report applies to, it's just another filing. I mean, whether you like it or not, you know what I mean? I don't know what your political affiliation is, but it just is what it is. And we have to submit this report to the federal government, and it applies to what's called a reporting company. Okay, so that's the first thing you need to know is whether or not you're a reporting company. A reporting company is basically any entity that is, registered or doing business in the United States, right? So meaning that a sole proprietorship is not a reporting company, right? Because a sole proprietorship is not an entity, right? So LLCs, corporations, partnerships, professional corps, et cetera, right? They've got a lot of different names in different states, limited partnerships, et cetera. Like these are the reporting companies. They're registered with the Secretary of State, and so you have to file, okay? And then what you need to report, and I'm going to give more details about this and coming up here, is a beneficial owner, basically someone who owns or controls the business. Okay, you have to report that, right? Every owner and anyone who controls directly or indirectly. Okay, so we're talking directors, officers, managers for LLCs, that kind of stuff. Not employees, not directors of operation, like have like literal control over the business to direct it, like a board of directors and that kind of thing. Okay, so that's the basics on the beneficial owner report. Now we're starting with this. Okay, we're gonna hedge into here next. You got to understand what's at stake. Okay, and it is a pretty penny for not getting this filed on time. There's a $500 a day penalty per business. Okay, so if you got a lot of people are listening to this. I've got multiple businesses, maybe different holding companies and that kind of stuff. It's per day per business starting January 1st. Okay. I'm going to go over timelines in just a bit here, but $500 per day, maximum of 10K per business. And they even can hit you with jail time. I mean, guys, they are not messing around. So this is extremely important to know what you need to do because this can rack up. I mean, like, for example, you got 3 companies, maximum of $30,000 of penalties. That's insane, right? Take yourself on vacation, go to Europe, instead of spending that money to fincen. You know what I mean? Okay, so those are the penalties. Okay, so like I said earlier, the beneficial owners are required to be reported. Okay, indirect and direct control. Some people are even filing as it relates to a community property interest in shares, okay, or membership interest. It's not clear on whether or not that is the case, but some people are being a little bit more conservative. For example, California's community property state. So if I were to die or I get divorced, my wife has got a 50% interest in my ownership in this company. So does she have direct or indirect control? It's not clear, but some people are being conservative and filing that way. Anyways, and then I have here on the bottom, anytime more than 25% ownership in a company changes. This is very important to know and understand. Just because you filed it once doesn't mean you don't have to file it again. You have to file it again if 25% or more ownership changes. Okay, so that's extremely important. And the timeline on that is very limited. It's only 30 days you have to file that before you start incurring penalties, right? So it's extremely important to know if you're selling your company stock, right? Now, if you're selling the assets of your company, ownership is not changing, just the assets. So you're good, right? But if you're selling stock, membership interest in your company, you're gonna have to file again or you're gonna get penalized. Okay, so that is that. Now, the deadlines, what you need, this is defines everything here. You got 3 months to file if you formed a new company in 2024. Okay, so if you filed in February, 3 months, you got to file, right? You have until January 1st of this year. This is why Tay really asked me to talk about this, because you got a couple of weeks to file if you have an existing business before 2024. You've got January 1st. By January 5th, you've incurred 5 days worth of penalties, et cetera. You do the math, it's not pretty. Okay, and then starting in January of 2025, you only have 30 days to file for a new business. So it's extremely short. And like I said earlier, if you sell or change, it doesn't have to be sale, it's just a transfer of more than 25% ownership, you got to refile, right? So questions would come up, well, what happens if I die? Someone inherits my business? Yeah, your 25% or more ownership is changing, you got to refile, right? So extremely important to know these deadlines because this is when the penalties will start to occur. Now, not everybody has to file, guys. There are a total of 23 exemptions. Okay, I'm not going to go over all of them. You're literally going to fall asleep in front of your computer listening to all these stupid little exemptions that apply or may or may not apply. So I have the two most common ones that people ask me about. Okay, number one is an inactive business. They say, David, I haven't done any business this year. Okay, I formed it, or should the inactive entity exemption apply? Well, if you look at the rules, it has to have existed before 2020, right? So, I mean, how realistic is it that you did no business in the last, 4 years, right? I mean, extremely unlikely. You probably wouldn't even have the entity formed if that was the case, right? So you have to have no business and no assets, right? So it's not, you can't say, well, I have my house and it's just sitting in my LLC, and so it's not really conducting business. Nope, you got assets. You cannot qualify for the inactive entity exemption, okay? So it's extremely difficult to qualify for that inactive entity. If it's literally just dormant, sitting there with no assets, no money for like 5+ years, then yeah, then you may be able to qualify for that. And a large company, more people qualify for that. You got to have 20, like basically 21 or more full-time employees, 30 hours or more per week to qualify for the full-time according to this. And then 5 million or more gross revenue as reported on your previous tax return. Okay, so it has to have been reported to the IRS, and you got to show that you have 5 million or more gross revenue, and you have to have an operating presence in a physical office in the United States. Okay, so if you don't have a physical office, that's not going to work, right? You got to do that way. Okay.
Quick question on this one,
Yeah,
David.
go ahead,
Quick,
Jake.
this large company. So if there's a company with 21 full-time employees, but they don't have a $5 million gross income, do they still have to file?
They would have to file. You have to have
Gotcha.
all of these are like prongs. You have to have all of
Gotcha.
them, right? Yeah. So I know plenty of people that got 100 employees, but they only have 4 million in gross. You're not going to qualify. You know what I mean?
Right.
So you got to meet all three of these. Same thing with the inactive entity. All three of those prongs must be hit to be able to qualify for that exemption. And if not, you must file. Deadlines apply. penalties apply, all that good stuff. Okay. So guys, I got some free resources for you. If you've got questions on this, okay, you can go to fincen.gov/BOI. That is the source for all of this. Okay. It basically has a bunch of like Q&A type stuff, but this is going to shock you guys, but the federal government isn't that well organized. And so it's really unclear as to a lot of different things, right? But I also have a free survey for you guys that you can go to see if one of these exemptions apply and whether you need to file. California Business Formations.com/offer/CTA. Okay, the CTA is the Corporate Transparency Act. That's another word for this thing. Another name for it is the Corporate Transparency Act, if you hear that. So you can go to that, and then you can determine whether or not some basic exemptions may or not apply. Okay. And then finally, if you guys got questions, please reach out to me. I do not want to see you guys paying these stupid penalties that are avoidable. This report must get filed before January 1st. Let's avoid those penalties. Make sure the exemptions apply or not, all that good stuff. Let's get you guys taken care of. Okay.
Awesome. Thank you, David. Very, very helpful information. I mean, I didn't know about the jail time.
Yeah.
Well,
Yeah.
I mean, this
Yeah.
is serious, right? So yeah, I'm really glad you brought that up. And as far as a penalty goes, so do they, if we file late, for example, uh, do they just like send you a bill in the mail?
That's a very good
Or I
question.
don't know. So we have to, like, I don't know, because for tax returns, we calculate the penalty and pay that together. I don't know if that's the case, or would the late filers be expecting an unhappy news in the mailbox?
Yeah,
Uh,
that's a great question. And honestly, FinCEN is so new. It is this brand new thing in terms of this report being filed. So enforcement of this is not clear. Like it's not.
I,
I'm not sure exactly how that's going to go. But one thing you can be sure of for sure: the federal government is get their money from you. The
sure,
IRS
right.
is not getting.
I'm well aware of that for sure.
Yeah, yeah, you know about
Yeah.
that. You know about that.
Oh,
Yeah, they're getting
definitely.
it from
Yeah,
you.
yeah, yeah. Okay, gotcha. All right. I had a few questions, but regarding the exemptions, like nonprofits, trust entities, even DBAs, uh, I don't know, just do those folks have to worry about this, or is that out of the picture?
Yeah, like publicly traded companies, they're out, right? They don't have to file, although, and then nonprofits do not have to file. Now, if you have a DBA, that is not a business entity, so it depends. It's the core underlying entity, right? Is that a corporation?
Right.
Then yes, right? Is it a sole proprietorship? Then no, you don't have to file, right? So,
Great.
um,
Okay.
yeah,
Got it. Okay. Well, I think that covers a good information here for today, David. I really appreciate your time. And again, yeah, any questions that you have, please feel free to reach out to his office. David also helps my firm with the legal matters, and he's an exceptional help to a lot of the business owners out here in the Southern California. So, again, thank you everyone for your time. David, thanks again. Nice to see you here. And yeah, all right, everyone, have a blessed day.
all right, thanks, guys. All right, bye.